Yo, what's going on, boys? Welcome back to another video. Today is day 7 of trading training. Last video we went over liquidity and hold on. I was about to take a trade today, but as you can see, we're consolidating. Oh wait, you can't see. As you can see, we're consolidating, so I'm not trading, but it was looking like for a second we were going to continue higher. Anyways, if you didn't watch the last video, we went over liquidity and I think mindset. So I want to start giving you guys, I like the way TJR said it, building blocks and for your strategy. So the first step in that strategy is liquidity sweeps. If you don't have a liquidity sweep, you do not trade. I will really quick go over liquidity sweeps, and then we're going to get into fair value gaps and order blocks. All right, and then our next step, or not step, building block is going to be break of structure. So we will go over fair value gaps. All it is you need 3 candles. You need 3 candles. Pretty simple. You can see at the top of this wick, I marked that. And then at the bottom of the third wick, I marked that. This is a fair value gap. And price loves to come into these to continue the same direction. So as you see, we tapped into it, and we're most likely going to continue higher. Let me find another example. And now obviously, I don't know if it's obvious to you guys, but not absolutely every single confluence you're going to use is going to work 100% of the time. That's not how trading works. At all. At all. That's not how trading works. I'm actually going the 4 hour. I think we're going to find some better fair value gaps. So yeah, we're going to be going over inverse fair value gaps as well. We'll get into that, but I just want to find some normal fair value gaps first, right here. From the bottom of the first wick to the top of the third, when it's a bearish fair value gap, you can see we came into it to continue lower. Pretty self-explanatory. Go on the 1 hour, see what that looks like. So yeah, we had that big fair value gap on the 4 hour. We came into it, filled some orders, and then rallied lower. And the reason fair value gaps work, where the fuck did it go? No. Why am I on the 5 minute? Fuck, no wonder. The reason fair value gaps work is because right inside the gap, there was a whole bunch of sell orders that created this big candle and the gap. So whenever we retrace to all of those sell orders, the market makers are going to collect all those sell orders and retrieve more sell orders to push us lower, and then vice versa for bearish fair value gaps, or bullish fair value gaps, sorry. Bullish just meaning green fair value gaps, bearish, red. Bullish means market's going up, bearish means market's going down. Cool? Let me find another good example right here. Bam, bam. You can see I marked the top of the first candle, the top of the wick of the first candle, and the bottom of the wick on the third, creating this gap because there's a whole bunch of buy orders inside this gap. So whenever we retrace to it, we rally higher. There's a big ass gap here because there's the start of a new week, I think. I don't know. We retrace to it, and you can see this candle literally comes down, fills a bit more orders, then rallies higher. Come in, fill orders, rally higher. I wonder if it'll be better on the daily. Yeah, it's a little bit better. Right here, bearish fair value gap. Fuck. Man. We create it, and almost instantly, well, not instantly, this is the fucking daily, so like 5 days later, we come up, tap into it in order to push lower, and we pushed all the way down here. Taking out low over here. So we went over internal and external liquidity in the last video, and the way I explained it was whenever we reach internal liquidity, we then search for external liquidity. Whenever we reach external liquidity, we then search for internal liquidity. Internal liquidity is fair value gaps and order blocks. External liquidity is liquidity that rests below lows and above highs. So we tapped into this fair value gap, which is internal liquidity. Then we go all the way down and search for this this external liquidity that's over here. So we then take out this low, which is called a liquidity sweep. Whenever you see the wick push past a low and then the candlestick closes above the low, and then vice versa for highs. Let me find a nice liquidity sweep here for a high. I'm gonna go back on the 4 hour for this. Where are my candles? Okay. Right here. We have a high right here. Move up, move down, top of the wick. Mark that. And you can see we had a candle that pushed above it, the wick pushed above it, and then we came down and closed below the high, and then we rallied lower. That is a liquidity sweep. Let's find a couple others, then we'll go to order blocks. Right here, we have this high up here. We came up, the wick pushed past, and we closed below, and we went lower, but like, wasn't that crazy lower, but still. Where else? Where else? Let's find a low now. Oh, right here. We have a move down, move up, that's a low. Mark that. We swept it right here, rallied a bit lower, swept it here. Actually, that was a shit example. Let me find a different one. That was a shit example. We're just consolidating all here. This is another good example of internal and external liquidity. So we have internal liquidity here, fair value gap, that we tapped into. And then, what do we search for? Liquidity sweep, above highs. We went straight from internal liquidity all the way up to external liquidity. I'd love to see just some more liquidity sweeps. I'm gonna have to go in the 1 hour. Had to get one here. 15-minute. Where are my candles? Like, why does it do that? Shit's so annoying. I'm gonna stick on the 15-minute. I like the 15 for liquidity sweeps. Oh my, right here. Right here. Where'd it go? I just lost it zooming in. Right here. See? Let me zoom in. We have a miniature high right here. We have a move up and move down. Mark the highest point of the two wicks. See all the way over here. We swept it, instantly went to internal liquidity. Swept it, rallied lower. Rallied lower. It's pretty simple. Like, we probably tapped into some low time frame fair value gap within this candle that this candle went to, this wick. Then we rallied higher, went to external liquidity, swept that high, rallied lower, went to internal liquidity, touching or getting into all these fair value gaps. And yeah, that's all liquidity sweeps are, is when a candle wick pushes above a high and then the body closes below it. And for lows, perfect right here, it's when a candlestick pushes below the low, or the candle wick pushes below the low, and the body of the candle closes above the low. Okay? Liquidity sweeps are fairly easy to learn, fairly easy to teach. So yeah, those are liquidity sweeps. Now let's go back to fair value gaps. I'm going to do a couple more examples, then we'll go into inverse fair value gaps, and then we'll go into order blocks. And then that'll be it. Probably be like a 15-20 minute video. So I'll just use the same thing right here. So inverse fair value gap. All it is instead of, let me go into replay. Instead of us creating a fair value gap, we tap into it and then rally higher. Sometimes we'll have a candlestick that closes below or past the fair value gap, right? Meaning it will give us more pressure to continue that direction. And would you look at that? Do we tap into this? No. Like obviously, like I said earlier, inverse fair value gaps or any single confluence you use isn't going to work 100% of the time. You could see we closed above this fair value gap, but we didn't continue higher. Probably because it was just a retrace on a higher time frame. Remember what I said, higher time frames hold higher power. I said that in one of my first videos. So you always got to remember that. Just because it goes up doesn't mean it's going to continue up forever. So yeah. Oh. Yeah. So we inverse that fair value gap. All it is when it closes below. And if we close above it, there's a good chance they'll continue higher. But this was probably just a retrace, like I said. And then we continued lower. Just like that. Let's get out of replay. Let me find a bullish fair value gap that got inversed. There's not too many examples here. Come on. I'm going to 5 minute because that's what I use fair value gaps on the most. Real quick, I think we already went over this, but there's another good example of just fair value gaps. Create a fair value gap, instantly tap into it, rally lower. It's that simple. It is that simple. Another good fair value gap example right here. Fair value gap, as soon as we create it, we tap into it, rally lower. Like, why can't I find... Bam! Fucking about time. Right here. So we close. If it's this close, it's still an inverse. Like, we didn't close exactly above it, but if it's that close, it's an inverse fair value gap, and we rally higher. I really want to find like an A+ example. Absolutely A+ example. Jeez. No. Holy man. This is another good example of fair value gaps. Right here, we got this baby fair value gap. Come up, come down, tap into it, rally higher. And come down, tap into this fair value. I'm a liar. There's no fair value gap there. But yeah, we swept out these lows, rallied higher. So that's a liquidity sweep. Right here, we swept that low, candlestick closed above, fucking rallied higher. Where are my inverse fair value gaps at? Oh, here we go. Here we go. Miniature fair value gap here. Like I said in my last video, size of the fair value gap does not matter. You can see 2 candles after we created the fair value gap, we closed way above and we fucking rallied. Right? Okay, I'll find one more example of an inverse fair value gap and then we'll move on to order blocks. It's already 15 minutes. Golly. Good example of a fair value gap. Right there. Whoops. Oh my god. Delete this. From here to there. Create it. We tap into it. Rally higher. Oh, right here. So, fair value gap right here. Let's mark it out. Bam, bam. Close way above it. Rally higher. And look what happens right after we inverse this fair value gap. We create another fair value gap, which we retrace to and fucking rally higher. This was a great trade to take if you, for some reason, are trading between Asian and London session, but which I don't recommend. So yeah, we create this fair value gap, go down a little bit lower, liquidity sweep here, go up, inverse this fair value gap, create another fair value gap after inversing. Whoops. Create another fair value gap after inversing. We retrace to the new fair value gap and fucking rally. Like, just look at that. Look at these examples, man. Unbelievable. Alright. Let's remove all my drawings. Go on the 4 hour. Let's go into order blocks. So let me find a good example, then I'll explain what it is. There's a good example not too long ago. If I can find it. No way. Did we tap that? We did not. Jeez Louise, man. I can't find these fucking examples here. Here we are. Okay. So, I briefly went over fair value gaps and order blocks in my last video. That's not a box. But I just wanted to go more in depth. So, all a order block is, I'll do a little drawing here. All an order block is the leg up before a big leg down. Look like this. All it is the leg up before a big leg down. And I use between 1 to 3 candles. If the leg up before the big move down is more than like 3 candles, it's not very high probability. You would normally like to see 1 candle like this. Do we tap that? Like this is an order block up here. See, small leg up. All right. Can you get out of my way? Small leg up before a huge move down. If we tap into this, we are continuing lower. Yeah, we're never tapping into that. Not soon. And then, vice versa, would be the small leg down. Let me move this out of the way. Before a big leg up. Green. Bam. 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 So order blocks are either the small leg down before a big move up, or the small leg up before a big move down. Let's get rid of those. And the reason why they work is because inside of this gap, or block, whatever you want to call it, there's a whole bunch of buy orders that created this huge leg down. So, if we return to this level that caused this massive leg down, we're going to have another massive leg down. Okay? So, let me find an opposite example. Go in the daily for order blocks. I feel like it might be better. Like right here is a good example, but I don't think we ever tapped into it. Unless we did. I'm a fraud. No, we never tapped into it. That's an order block, but like, golly, man. Anything over here? I just can't find these good examples, man. Maybe on the hourly. Fuck the daily. Fuck the daily. I wish I could find that order block from a couple days ago. Here's another bearish one. Small leg up for a massive leg down. This one didn't work, but like I said earlier, it's not going to work every time. It's just how it is. It's not going to work every time. Fair value gaps aren't going to work every time. Liquidity sweeps aren't going to work every single time. It's how it goes. You can't have a 100% win rate. It's impossible. It is impossible. Right here. Small leg down for big move up. Did we retrace to this? Yep. The second we tapped into it, we got another move up. Whoops. Second we tapped into it, we got another little leg up. Do we tap into another one that's down here? No, but there is another one right here. This is a really good order block, but I don't think we tapped into this. No. Unless we did later on. Oh, we almost did. We did over here. Yeah, we tap into it. See, second we tap into it, we close above it, and then we go below it, and then we have another leg up. I'm not really finding some good examples here. It's making me angry. Not having fun. Try the 4 hour. That's what I usually find order blocks on. Oh yeah, right here. Right here. So you have this 3 candle order block, small leg down for a big move up. You can see, come down, tap into it, and fucking rally higher. See, this is a good example of an order block. So minute leg down for a big move up. We barely tap into it and rally. And rally. I'll find one more of each, and then that'll be it for today. Fucking 23 minutes, holy shit. Holy shit. Whoops. 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 It's alright. Actually, I think that's good. I found pretty good example. I found a good example for a small leg down and a big move up, but I haven't seen a small leg up and a big move down order block that was a really good example. No. Right here isn't bad at all. Small leg up before a big move down. Tap into it, rally lower. There we go. There we go. And this up move caused this big down move. So inside this box, is a level that caused this big leg down. So whenever we return to it, we're more than likely going to have another big leg down. And all these confluences are doing is giving you a edge in the market. Doesn't mean you're going to have a 100% win rate. It's giving you an edge in the market. So that's it for today. We learned about fair value gaps, why they work, inverse fair value gaps, why they work, liquidity sweeps, and I told you in my last video, my liquidity video, why liquidity sweeps work, and order blocks and why they work. So yeah, I pray you guys are taking physical notes and you're not just watching all this shit going in one ear and out the other. I pray that's not the case. Hope you guys are actually taking notes. I'll see you guys on Tuesday for day 8. We'll be going over break of structure. And yeah, I'll see you boys in the next video. Peace out.